Trading is closed. Let's look at the flows. This is Vector Daily. The VIX closed at 15.12, signaling a calm market environment well below the critical 20 level, indicating a risk-on sentiment prevailing among investors. However, the calm seas might be deceiving, as underlying currents show signs of potential instability. In the macro view, the S&P 500 inched up 0.16%, closing at 695.16. However, the breadth signal remains weak, described as narrow, suggesting that only a few stocks are driving the market higher. In the bond market, the 10-year Treasury yield is holding at 4.19%, maintaining pressure on equities, while Bitcoin, often a gauge of risk appetite, remains relatively muted in today's session. Sector rotation today was marked by a defensive tilt. Consumer staples XLP led with a 1.17% gain, reflecting a cautious investor stance, hedging against potential future volatility. On the other end, financials XLF lagged, posting a minor 0.79% decline. This defensive rotation suggests that despite the overall market calm, investors are preparing for possible turbulence ahead. The so-called Magnificent Seven stocks exhibited notable divergence. Google advanced by 1%, benefiting from strong sector fundamentals, while TSLA followed with a 0.89% gain. However, Meta struggled, declining by 1.7%, highlighting the risks of stock-specific volatility even within this elite group. The mixed performance underscores the varied dynamics at play, with sector-specific factors driving individual stock movements. Looking at today's outliers, AMD emerged as the top gainer with a 3.24% rise, closing at 207.69. This reinforces the tech sector's potential amidst a mixed market. Conversely, Meta was the top blue, shedding 1.62% and closing at 641.97, illustrating the risks inherent in stock-specific factors despite broader market stability. As we look toward tomorrow, key technical levels for the S&P 500 include a pivot point at 693.97, with resistance at 697.28 and support at 691.85. While the market remains calm, the weak breadth and defensive leadership suggest a need for cautious optimism. Investors should watch for broader participation to confirm if the rally is indeed sustainable.